Hello and welcome to the Collective Shift channel. Matt here to share with you the most significant news from the past week in macroeconomics as well as the crypto industry. It's been a hot start to the month in February in both the stock and crypto markets, so keen to get into that and share my thoughts with you towards the end of the show. But as we always start, I will kick things off with just how the stock market has been performing globally. And as I just said, it has been increasing and been a nice bounce off of what was a dismal January, where stocks all around the world, particularly the riskier categories of stocks such as tech stocks, really did get hit hard. So we've seen, a 3 to 5% increase in different indices, depending on obviously which country, whether it's ASX or the major indices in the US. What's been driving that, again, like everything I've talked about in the past few months, there's never one exact reason. It could just be literally people thinking that all the worst case scenarios have been priced in, hence the heavy selling in January. And now you've got people with capital on the sidelines. They've seen blood in the streets and they've decided to allocate their capital accordingly and buy in on some of these massive dips and drawdowns that we've seen. That's what my theory is anyway. As I said, never any single reason. I think I also want to note earnings season, as we've been covering in the past few weeks, did continue last week in the US. I think Apple and Alphabet were the two that kind of were the two of the first major tech companies off the bat, and they both, didn't shoot the lights out, but they weren't terrible either. So it kind of helped keep tech stocks at their current valuations. But then, Meta, formerly known as Facebook, they really put in a heavily, I guess, below expectations kind of earnings report last week, and I think they shed the biggest single day amount in their market cap in history, I'm pretty sure. Obviously coming off a very, very near record high company valuation, that dollar amount reduction obviously is going to be significant, but nonetheless it was just a massive news all around the world, and almost a reflection of, I guess, where Facebook is at in terms of the platform. I feel like more and more people I talk to, whether it's in Australia or overseas, just like less and less people using it. Yes, Instagram and WhatsApp and Messenger still have decent usage, but it's a real tricky spot for the whole company in terms of where they go to next, especially with their, I guess, PR and reputation taking a hit over the past several years. So anyway, their massive reduction did really hold back, I suppose, the Nasdaq's performance last week. I did just want to highlight it here. I never really go into specific companies, but I want to highlight it here more just because it could just be a watershed moment of, I guess, really eskestablishing this shift towards other social platforms and even, whilst it's still very, very small, I think the Web3 era or the crypto platforms that are really focusing on media and social networks, this could almost be more validation that, hey, these massive powerhouses, they can be, you can put a chink in their armor, so to speak, and they're not all encompassing, and you can never, I guess they're always there to be disrupted, right? I think you saw that with Facebook as well, disrupting MySpace back in the day. So whilst it can seem at times that they're just extremely powerful, could never be taken down, who knows? We might look back in 5 years and this could be really the time when Meta just really started to fall in its, I guess, public awareness and usage all across its platforms. Okay, we saw gold as well. I did just want to comment here to 2-week high, as well as treasury yields, 10-day treasury yields in the US hit 2-year highs. So what's going on? I think for the 2-week high in gold, I think that's a response to people just wanting some safety. I think there's tensions to do with, geopolitical tensions, which I've touched on in the past few episodes, to do with the Russian and Ukraine border and the amount of troops that are kind of congregating on the border. And then also inflationary risks, as we've been covering for the past, 5-6 months or so. What's interesting here is this rise in gold is also happening at a time when the prospect, of the central bank, the Federal Reserve, going a lot more aggressive on their, I guess, easing or tightening of monetary policy. You typically say that isn't a good situation for gold because, if they're tightening monetary policy and lifting interest rates, that's a super, I guess, for people holding gold, there's now, all these alternatives are getting more appealing to earn a yield on your money. So I did note that it was pretty interesting to see gold hit a 2-week high despite all the fears that the Fed might raise interest rates. Or there's a lot of conjecture and fear, speculation that they might just do that. So definitely notable there. What's the takeaway there as investors? I think this is more just a reflection of how confused everyone is at the moment. There's so many mixed signals. As I've said before, we've never lived at a time when valuations for companies have been so high, PE ratios and whatnot. And then obviously balance sheets of central banks have never been this high. Unemployment in most developed economies is doing pretty well. Inflation is, getting worryingly high. And, in certain countries, such as Australia and whatnot, you've got immigration levels at really, really multi-year lows. So yeah, I think it's all of these mixed signals in terms of what happens next for the macro economy. I think just acknowledging that no one really knows and everyone is just taking guesses. Acknowledging that there's nothing wrong with that, and it allows you to then make investment decisions, I guess, from that refreshed perspective. That's at least my approach anyway at the moment. Okay, I did just want to highlight what am I kind of going to be looking at with respect to the macro economy over the next week or so. Obviously, there's that geopolitical risk in Russia and Ukraine, of course, that will continue, and continue to see what happens there. I guess if that escalates further, as I've said previously, the market really doesn't like uncertainty. So if that were to escalate further, I would expect, stock markets in general and crypto markets, because they're so correlated at the moment, to take a hit. But that aside, what's going to be the biggest next event is by far and wide the inflationary data release in the US on Thursday. So that will be overnight heading into Friday, Australian time. Again, as I've said in previous episodes, if it's a lot higher than expected, I would expect to see, stocks in general, like higher risk assets such as, tech stocks and then obviously that'll trickle into crypto assets. I would expect them to sell off for reasons I've said multiple times over the past few shows. And if the US inflation data isn't as bad as what everyone is expecting, I think the expected print is going to be 0.5% increase in January, and for the 12 months, 7.3% increase. Just as a side note, central banks love it. In between 2 and 3% is generally what most developed nations and their central banks really aim for. So as you can see, 7.3% is way, way, way above where they would like it. So if it is below 0.5%, let's just say it rises by, 0.2% increase, and over the 12 months, maybe it's something like 7.0 or 6.9%. I would expect, markets and investors to the fears to be allayed with respect to the need for the Fed to really get aggressive with their monetary policy stance. And that will then kind of be interpreted positively when you go out on the risk curve towards tech stocks and crypto. So yeah, all eyes on that. And as I did say, treasury yields, you're seeing them already rise, as I've covered in past episodes as well. Now they're at 2-year highs, with investors likely to price for more aggressive rate hikes if the number of this inflation comes in higher than expected. So yeah, you typically see treasury yields and interest rates and I guess monetary policy stances and language used by the Fed to really be tight correlation. So all eyes on that on Friday. Moving on to crypto, there were a few major stories this week. I think I just wanted to touch on this one that came out Monday Eastern time, was that Tesla says it held nearly $2 billion US worth of Bitcoin at the end of 2021. Some people were saying this was the reason the crypto market and Bitcoin in particular rallied. I think, yeah, it could be a factor. But I think those in the market kind of knew this was already the case. I believe Tesla as about February last year or whenever it was, they did have that massive announcement that they were going to accept Bitcoin as payments, and then they came around a few weeks later and then cancelled that announcement. But I think in that initial announcement, they did also announce that they had bought Bitcoin and put it on their balance sheet in their corporate treasury. And I think most people in the industry knew that when they discontinued their accepting of Bitcoin payments, which I don't actually think ever started, they did not also announce that they divested or sold all their Bitcoin. That was always assumed. It was always assumed that they were continuing to hold Bitcoin. So, yeah, I think they took quite a decent loss on it, obviously, with the recent price performance of Bitcoin. But yeah, some people, I think for maybe retail who didn't realize, or maybe they assumed that Tesla had just gotten out of Bitcoin altogether. Maybe for some of them, this was surprising news. And I guess because of this news, they bought into Bitcoin because they had misinterpreted the news, possibly. But nonetheless, it was good to get some actual data on how much did Tesla buy of Bitcoin and how much did they have at December 31, 2021. All right, this was far more significant news than the Tesla news. It has just come in the past few hours, so I'm not totally across it, but I can already tell just from the reactions on Twitter and just from the headlines and all that this is very, very significant. US officials have seized $3.6 billion US dollars worth of Bitcoin from the 2016 Bitfinex hack. So that's nearly $120,000 Bitcoin. It's a result of these arrests that were made overnight. Okay, the Department of Justice their press release alleges that these people conspired to launder these proceeds and heavily implies, but does not claim, they were the original hackers of, for some in the industry might remember, what was then just like seismic news that Bitfinex was hacked and there was money taken away from what was, I guess, users' account as well, for those that did decide to keep their Bitcoin on the exchange, which is something I don't recommend for long-term and medium-term investors. Now, I would like to know if they are going to auction this off. That's typically what you see when the federal officials seize money. It then seize assets. They typically then go on and auction them off, whether it is Bitcoin or, luxury cars, you name it, seized property. Bitfinex is going to work with the DOJ to try and recover the seized Bitcoin. Um, I'm just trying to see what is going to happen with this with this Bitcoin, because that's very important. But I think this is going to be, I guess the main reaction and takeaway is going to be negative in the mainstream press. You know, government seizing Bitcoin. I think I did see before, this is the largest ever seizure of Bitcoin in Bitcoin's history of, what are we up to now, about 12 years. So that headline is very scary. Personally, I don't really think there's too much reason to panic at all. If you are a long-term investor, it doesn't really change anything about the value proposition of Bitcoin. And yeah, I think we might get to the prices later. It might have even started to cause a sell-off. But again, I just don't think this is great for Bitcoin's reputation. I think with headlines like this, which you will see all over them, definitely the mainstream news will be covering this. But yeah, I think this is the most significant news of the week. It might be a bit of recency bias, just because it's come in. But yeah, there might be more to report on this later with respect to what are the next steps now. Okay, this was, very significant news as well. On the more bullish side of things, KPMG, one of the big four, I guess, professional services, accounting firms as well, consultancy, the Canadian branch of KPMG has purchased Bitcoin and Ether, so the two largest crypto assets by market cap, and it's now holding them in their corporate treasury. So the amount that they purchased was not disclosed, so we won't know, at least for the time being, how much that was. But yeah, KPMG is such a traditional, major, globally recognized corporation. For them to buy Bitcoin and ETH, and particularly ETH, but even just Bitcoin, was just very, very significant. And I like this quote here as well. Further down, someone from KPMG Canada also saying that we've invested in a strong crypto assets practice, that is KPMG's crypto assets practice, that they offer to clients, and we will continue to enhance and build on our capabilities across DeFi, NFTs, and the metaverse. So again, a lot of the big four consultancy firms have all been increasing their, activities and offerings with respect to blockchain. More traditionally, enterprise blockchain back in the day, I think they would still do a bit of that, but yeah, it's great to see them now upping their capabilities into different sectors of crypto, such as NFTs, DeFi, and metaverse. So this was extremely significant, I think, because there was just a huge lull in these sorts of announcements. When Tesla announced this back in about February last year, or January, that they had invested in Bitcoin and put it on their balance sheet, obviously MicroStrategy a few months before that was big news in the industry, but no one really knew who MicroStrategy was. So when Tesla did it, it was just enormous. But it was, somewhat disappointing, and not disappointing. I think it turned out to be just incorrect, an incorrect assumption that Tesla was just going to, prompt and be almost the leader, and a lot of copycat companies would come out and invest in Bitcoin. That assumption was proved to be incorrect, and that was the consensus at the time, that Tesla was really going to set the benchmark there. You did see some lesser known companies then follow that trend and get on that trend and invest in Bitcoin, but overall overhyped and just a false assumption at the end of the day. So this news from KPMG was particularly significant, just because it's almost reignited that whole, I guess, value proposition, or that that extra profile of Bitcoin holders. That is, who am I speaking about here? It's companies who, want to diversify their cash holdings, and yeah, in this case, put I would say a very small percentage, I'm assuming, into crypto assets as just either a deflationary hedge or a store of value. Their rationale, I guess, is also not really disclosed, or at least from what I've read, which is, I'm not sure if they did release a reason why. But yeah, so this might now reignite this kind of wave of companies that add Bitcoin and Ether to their balance sheet. Or it might just be a one-off, and it might flop a bit like Tesla's announcement did. Okay. I did just want to cover Polygon had particularly big news overnight. They raised 450 million in a new venture financing round, with Polygon aggressively expanding its portfolio of Ethereum scaling solutions, and they are also working to attract the larger developer ecosystem. So I just thought there is, dozens, about 20 to 30 funding announcements every week, which we cover on Collective Shift up for members in our Sunday Fun Day post. But I did just want to highlight this one because, it's not just a crypto company that doesn't have a token. Like, we're talking about Polygon here, one of the largest. I think they're in the top 20, their native token. I don't own any, by the way. But, with this much capital now, to see them go and I guess expand, we've already seen them acquire multiple projects over the past 6 months or so. And they're really starting to pioneer and lead, efforts in terms of ZK technology, researching and development efforts, and just in general blockchain scaling and Ethereum scaling in particular. So it was some really, really, I guess, renowned names that participated in this round as well, which is particularly pleasing to see. And Alexis Ohanian's 776 fund that we covered last week, who had just raised a massive round, already putting some of that capital to work. All right. Partly what I'm looking forward to this week is actually there's a lot of crypto companies that are just the Super Bowl in general. Is kind of, there's just this build up of speculation with regards to how crypto is going to, be visible and whatnot in the Super Bowl. What do I mean by that? Advertising, of course, is by far the first point there, which, a lot of people, as they say, tune into the Super Bowl not for the game but for the ads. So I think there's 3 companies here which we all know, all exchanges, unsurprisingly, FTX, Crypto.com and Binance, have all apparently purchased or are going to be airing some ads during the Super Bowl. And then I've just been seeing so many rumors with regards to NFT projects, and I think, as I talked about last week, I think Snoop Dogg's performing at halftime, and there's a lot of rumors that there'll be some reference to Bored Apes, the Bored Ape NFT collection, and who knows, maybe even some other NFTs. There was also, I think, Budweiser, of course, a huge beverages company in the US. They have their, I think, their Nounsdow avatar, and that's their beer themed avatar. And I also saw earlier today that is also going to be appearing in the Super Bowl. I would assume on their ad, but I guess we'll wait and see. I think I'm really looking forward to seeing if there is any other surprises as well, particularly more so from the view of NFTs, because you could see their the prices of those NFTs really, really start to rise if there were to be some coverage in the Super Bowl. But I guess we'll wait and see. Speaking again more on the mainstreaming of NFTs, some more auctions been announced lately from the two powerhouse auction houses, traditional auction houses, so that's Sotheby's and Christie's. They're going again with their NFT auctions. As we saw last year, they did quite a few, and that was honestly their auctions were a major factor, in my opinion, of legitimizing NFTs and just spreading awareness of what these NFTs even are and what their value proposition is. So for those who would remember, I think Beeple's was his NFT auction. I think that sold for 69 million. His collection, that was one of the catalysts for that massive boom in NFTs, about 10 months ago or so, 11 months ago. So what have we got here? Sotheby's is selling 104 CryptoPunks, I think, in one lot. So from my understanding, they're auctioning off a batch of 104 CryptoPunks, which I believe their floor price of a CryptoPunk these days is about 70 ETH or so. So you do the math there on how many millions this auction could get into. So it'll be interesting to see if the buyer also reveals themselves as well. So that's going to be on February 23. And then also recently we saw World of Women, another very, these days a blue chip NFT collection. Christie's announced that they were going to be auctioning some World of Women NFTs from that collection, I think in association with International Women's Day or Women's Month, which is in March. If I'm not mistaken, that's what this auction is celebrating. I know another women-themed NFT, Boss Beauties, is also being displayed by the United Nations, again in recognition of International Women's Day, which I believe is at the start of March, one of the first, March 1st to 9th, somewhere in there. So again, just to see 12 months ago, to see where we are today in terms of just mainstream brands, that household names getting involved in NFTs in every which way, it's just quite astounding to see how far we've come in 12 months. And as I've said in many episodes, I think people in crypto who think NFTs are becoming a bubble or are already a bubble, I think a lot of people really underestimate how small NFTs are in terms of market size relative to crypto. And that's one of the reasons why I've said NFTs, I still think, have quite a bit of room to run before there is the inevitable really harsh bear market. Because they are still quite small if you refer to the data on nftgo.io. And again, just to finish off on this further mainstreaming of NFTs, this was the first venture funding round that I can recall in terms of an NFT collection, or the entity behind a collection raising external financing. If it isn't the first, then it's definitely the biggest, because 100 million in funding. It's just a massive size for a NFT collection that's not been around for that long. This is Pixel Vault, the one I'm talking about here, and they have multiple NFT collections. I think they have 3 or 4 out at the moment. So this was heavily rumored and more or less known within the NFT investment community ahead of time. So the prices did not really pump that much, which again could just be a signal of how small the NFT market still is. Because if this happened back in the altcoin booming days in late 2017, and if this sort of announcement happened, you would have seen that altcoin price just absolutely soar on the back of predominantly retail money coming in and reacting to the news. So I did just want to note that there. But yeah, you can check out Punk's comic. I think, yeah, Meta Heroes Universe, Meta Heroes Identities are two of their other collections. And then similarly, there were rumors, unconfirmed sources, that the Bored Ape, the entity behind Bored Ape Yacht Club, that being Yuga Labs, is, you know, in talks at the moment over a funding round that could give Yuga Labs a valuation as high as 5 billion, so billion with a B. That again, Yuga Labs, they would only have to be, well, Bored Apes have only been around for less than a year. I would assume Yuga Labs was only, you know, really started as a corporation or as an entity. If it was less than a year old, they would have to be not much more than a year old. And to see them having a valuation of 5 billion, or rumored at least, is just astounding. Again, I did just want to stress that they are just in talks, and, you know, it may turn out that this deal never even gets done, or alternatively, the valuation could be a lot less. But definitely still worth watching this space. In terms of price performance, as I said at the top of the show, yeah, Bitcoin has had a really, really nice bounce off of that heavy sell-off towards 30,000. I think it got under 32,000 there for a while back, you know, almost 3 weeks ago now. But yeah, putting in a really, really strong green candle on February 4th, rising from 37,300 US to 41,500 in a day. And importantly, it actually continued. It, you know, had a bit of a sell-off the day after, which would have been expected, but then very, very importantly, continued to climb up higher, as we can see here for those of you watching the video, and did importantly again climb above the 50-day moving average as well. So yeah, in terms of what's next, I think the CPI print, or the inflation print or release, is going to be very, very important in terms of what Bitcoin does for the rest of the week, for reasons I've talked about ad nauseum on this show. Similarly, ETH, unsurprisingly, has kind of followed same sort of price action as well. Got up as far as 3,200, which was the highest it had been since January 20, and has retraced a bit, similarly to Bitcoin. I did just want to see if that news of the largest ever seizure by federal officials is actually doing something. If it has spooked markets. What we got here on the hourly candles. I'm not sure when the news dropped, to be honest, but doesn't look like it's too severe at the moment, which is good news. I guess we'll continue to see some volatility in the short term anyway. I expect there at least to be, on the back of this inflation data. Volatile to the upside or to the downside, who really knows at this stage? All right. I did just want to end this show with, I guess, a bit of an announcement, really, that this will be my final macro and crypto update. I think I started doing these about 3 months ago or so every week. I'd never really done much video at all, to be honest, in my life. And you're probably sick of me saying all the time. But yeah, we do have another research analyst, Kinji, who he's in charge of our long-term growth portfolio at Collective Shift. And, you know, as part of that, he's always, you know, updating, I guess, the macroeconomic backdrop. And I think it just made a lot more sense for him to start taking these over. And that will really allow me to do more of what I love doing, which is, you know, the investing side of things, and, you know, researching in an effort to find the best investment opportunities to share with Collective Shift members. Lately it's been a lot in the NFT space, but yeah, also just in general in terms of crypto assets. To that end, we launched the Collective Shift NFT portfolio yesterday, which I'm kind of co-leading that with Nathan, a senior research analyst at Collective Shift. We're both deep in the NFT rabbit hole at the moment and trying to extract, the best investment opportunities where Collective Shift puts its own money into these NFTs, and then we share them with members, many of whom are very busy people, and they don't have time to do what we're doing, which I still count myself so lucky to be able to do this as a full-time job and to be in the weeds of crypto all day, which I absolutely love. But then for our members to look out for them and to have their best interests in mind is, it's just something that I absolutely love doing and going to be doing more of it. So you will still see a lot of my content on the YouTube Collective Shift YouTube channel as this year continues. It's definitely not goodbye. But yeah, thank you for tuning into these and all listening on the podcast as well. And these segments, I know a lot of you do like them, these macro and crypto weekly updates, again, because I know so many of you are so busy and you like us to condense it for you and to make sense of everything. So Kinji, I'm confident, he can definitely do that, and probably a lot better than me, to be honest. So yeah, in terms of I suppose what the outlook is for the week ahead, I suppose you'll be seeing a lot more content from me on the member platform as well. I think me and Nathan are doing our first NFT report. We're now bringing it to a fortnightly frequency, previously monthly, and we just thought that's not the way to go. These need to be more frequent, so we're having our first fortnightly one this Friday. And we're continuing with these weekly workshops, which we've just started in the past few weeks as well. So for those of you who did watch that, you would actually already know who Kinji is, because he was with me on the DeFi investing workshop that we did 2 weeks ago now. So I did my music NFT investing workshop last week. Nathan and myself did NFT investing 3 weeks ago. I think Nathan's up this week again for members for on-chain NFTs, which is something he's really passionate about. So if you did want to tune into that, you can sign up. And we have 14-day free trial at the moment, and that's launched recently. So head to collectiveshift.io. There's a link below the video or the podcast if you're listening, and you can go ahead and sign up to a 14-day free trial, which allows you to get the full access of everything we publish here for members on the Collective Shift platform. So I'll leave it there. Thank you for tuning in to this episode and all my previous ones. And do make sure that you subscribe and comment, leave a review on the podcast as well, because we are really looking to up the volume of content that we also publish publicly. So I'll leave it there. Thank you all, and enjoy the rest of your day.